If you ever find yourself thinking that maybe you made a bad purchase buying gold or silver when it was a little bit too expensive, just remember, somebody out there bought in April of 2011. Okay, so statistically speaking, most people start buying gold and silver when the price is on the rise. It's just more interesting. And I'm no exception. I started buying both of them in 2010, and I actually bought a small amount prior to that, but it wasn't really until 2010 that I got in and started buying regularly. And I thought some of that background might be helpful because a lot of people came in last year when prices were on the rise. And if you compared that against where prices are at today and only look at the 1 year window, well, I'm sure there are at least a few people out there wondering if that was the right move. And this all feels pretty familiar. It reminds me a lot of when I first started buying gold and silver in 2010. Now, every time I bought, the price was higher than the last time, and it trained me to think that that's what it did. Until 2013, when the price of both dropped down to lows, and then they stayed that way for 6 years. I'm not trying to scare anyone there. Stick with me a little bit. Again, this is just background. Now, in the 2011 run-up, I stopped buying for a solid year because the growth in price was just too significant. I felt like I was too late to that party. I remember going into the local coin shop once to grab an American Silver Eagle, or actually a few of them, and the price had hit $35 for each coin. And that was the first time I'd left the shop without buying anything. Now, if I'd stopped right there and just waited for the price to catch back up, that would have felt like a terrible waste of money. It would have taken almost 9 years for it to come back. But seeing that rapid drop in 2013 actually got me back into buying. I just thought about it less like an investment and more like a backup plan. And the habit became less about the current price and more about just having a base of hard assets. By then I'd seen stocks and real estate crash as well, so I wanted to make sure that I'd be a little better off if any one of those crashes hit again. Now that way, if the real estate market crashed, or the stock market crashed, or something happened in my career, I'd be building out other asset legs, and that was my goal for years. Now, in those years between 2013 and 2019, though, I really regretted not taking advantage of the 2011 silver prices and selling at the highs. Now, people like to look backward and give their advice as if they knew what was happening at the time, but the price of silver fell like a rock. And because I'd stopped buying both silver and gold because of those crazy price jumps, I stopped watching the spot price as well, and the price of silver was back below $30 almost before I realized it. Prior to that, I'd always felt pretty smart about my purchases. The price seemed to be higher every time I looked. I was getting pretty buff just patting myself on the back all day long. But that turned around pretty quickly when I missed that selling window, and it felt like a total pump and dump. I don't know that I had that terminology at the time, but I was the dummy who didn't sell, and it definitely took me off guard. So like I said, I looked at it differently after that. I went from thinking of it as an investment to seeing it as a savings and a fallback. And I slowed down my silver buying after that pretty significantly. But even so, going into 2020, I had a monster box of American Silver Eagles, and I think I had about 120 ounces or so of 10-ounce sunshine bars. Now, when the run on metals kicked in again last year, I saw the scenario of silver shooting up again, but this time around, the premiums were a lot higher, and honestly, I felt like the prices were just going to dump again. Now, I didn't want to play that game if doing it meant that the dealers were the only ones who were going to be profiting. And I was out when the premium on silver hit 25%. It was too much for me. So this time around, though, even though I wasn't buying, I watched spot very closely. And I sold most of my silver in August when the spot price hit its high right around $30. And then I sold the rest in February when the premiums were out of control. Now, this isn't advice for any of you to sell silver if you have it. It's really just an overview of why I got out personally. I didn't want to be left holding the bag again. And in August of last year, I was also seeing a lot of potential in Bitcoin. So selling silver and buying Bitcoin and Ethereum, that felt right given my last go around in 2013. I probably still had a little bit of PTSD with silver. Now, my experience with gold is different. Even though the trend and the timeline has been pretty similar to silver, I didn't really change my buying behavior there. Now, just like silver, I'd been buying that 2011 run up. Now, with gold, I did stop. I didn't buy the extreme top of that spike simply because it felt too expensive, but I had some expensive gold in there. I got up to about the 1500s, and then I waited until the prices fell again in 2013. Now, again, that wasn't out of any real insight that the prices were going to go up and then they were going to shoot back down. I had passed my tolerance. I didn't feel like I could buy anymore. But when the prices dropped back down in 2013, I jumped back in and I haven't stopped since. I even bought not too far from the all-time highs back in August of last year. What I learned from 2011 was that it's impossible to know what the price of gold and silver will be a month into the future. But you can always check your spending by looking backwards. And what that means is that you can increase your purchases on relative dips. So if I'm buying a smaller monthly amount to dollar cost average my purchases, I might buy more if the price of gold falls, say like 10 or 15%. And that just happened, and I have been trying to buy more over the last few months, even though it's always possible that we could see further dips in the months ahead. Now, the other thing that I learned from buying at past highs and then waiting that out for 6 years of lows is that the price only matters if you sell. Now, I did take a bit of a loss on my first gold sale, and I felt a little bit dumb about it, quite honestly. But I had an opportunity come up that was unexpected, and I had enough gold sitting around to make a difference on a down payment. So I sold some. Now, that dumb feeling, of course, came primarily because I had been viewing gold as an investment. And that all seemed to make sense when the prices were only going up. And I was buying a lot of coins since everything seemed like easy money. I wasn't paying a whole lot of attention to what I was buying. And it just turned out to be a little bit harder to sell some of them. Now, that's the story I tell about the pile of 20 francs roosters. Spot had dropped, and then on top of that, it just was harder to sell them locally. It's kind of a double whammy. But even if there was a little bit of a net loss there, what that taught me was just how important it was to have something beyond typical emergency savings. So again, I didn't stop buying, I just switched gears and just started buying what the local coin shops wanted instead of what I thought was interesting and cheap. And so I've completely changed my view on gold at this point. And just to sum this whole thing up, I think I can say it pretty quickly. First of all, I no longer see gold as an investment, I see it as a smarter savings plan. I know how beneficial it can be to have a significant amount of it available. I also don't see price corrections as something that will lose me money. I see them as times to buy more. And again, I know that prices are going to go up, I know they're going to go down, but you only lose money if you sell. So you just have to be patient. And if you're one of those people who started buying heavy on high prices last year and you're having a little bit of a mid-cycle crisis now that prices are lower, well, I've been through that twice now, and I'm still not thrown off. All that advice you hear about learning from mistakes and getting up one more time than to get knocked down, well, that's the reason that I'm calm when gold is acting tricky. I've seen it act that way before. And even if history doesn't repeat itself, it often rhymes. That was Mark Twain who said that, by the way. And maybe you knew this already, but before Mark Twain made it as an author, he actually set out for Nevada in 1861 looking for gold. But because he couldn't find enough to make it, he took a job at a newspaper, and that's actually how his writing career kicked off. His story about Jim Smiley and the celebrated jumping frog of Calaveras County, the story that made him famous, well, that was built around his time trying to find gold. So anyway, you're in good company if Mark Twain was a fan of this stuff too. Now, it's hard to top Mark Twain. I'll just say I didn't buy in April of 2011, but I did buy in August of 2020. And that was about 4% off all-time highs for gold, a good 15% higher than it is today. And I'm not fazed. I think that will do it today. Let us know what you're up to in the comments. If you like the topic of gold and silver, also be sure to hit the like button. That helps get the word out. I hope you're all doing well. Thank you again for watching. Always appreciate your time. Take care.